Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to Zacks Top Stock Picks of the Week. I'm Tracy Reinick, and this week I'm joined by Brian Hayes to bring you two Zacks #1 rank strong buy stocks. We put this video out every week, so if you're new here to our channel on Zacks, welcome. And you can get a lot of stock picks with our top Zacks ranked stocks. Every week we bring you two, and we're bringing you two technology stocks this week to end the year. That's kind of fitting, right? Those are the hottest stocks out there, and those have, many of them have Zacks #1 ranks. Now, what does it mean to have the Zacks #1 rank? It indicates that the analysts are bullish. They are raising their earnings estimates, not the analysts at Zacks necessarily, but the analysts out there that we gather the data from. They are seeing something good going on at that company. And so they're raising those earnings estimates. And that's when you get the Zacks #1 rank. So we like to have stocks where something good is going on and they're in the hottest industry, which is technology. So my stock that I'm bringing this week is AppLovin, ticker APP. Everyone's loving it this year. It is one of the best performing stocks out there, up over 700% year to date. I'm not going to lie, it is red hot, but maybe there's a reason for its hotness. Let's take a look at the chart, though, because you don't see this every day. It's pretty incredible to see a stock that gains 755% in the year. There's the VOO at the bottom, up just 24% for the S&P 500. And so this is what everybody is talking about with AppLovin. Can this continue to go on? Why is it the Zacks #1 rank? So I wanted to take a look at some of the other data we have that indicates why it has such a great Zacks rankiness. So you can see when you go to the detailed earnings estimates page, our Zacks rank is right up here, the #1 strong buys. And then we see the style scores. It has an F for value. I don't think anyone's going to be surprised with a stock that's up 758% year to date, that it might not still be cheap on a value basis, but it's got the A for growth. I'm not sure why it's got this D for momentum because it's very momentum-y right now, but it has pulled back off those highs. So that might have impacted the style score there. But we're buying it for the growth, not for the other fundamentals. You can see the PE down here. It's now at 82. So you're not getting it cheap, as I mentioned, but why is everyone buying into it? What is looking good down here on both the sales and the earnings? So we'll start with the sales, expected to be up 39.9% this year. I took a look at the third quarter earnings, and revenue was up 39% for the third quarter. They also had some very interesting free cash flows now, up 182% in the third quarter to $545 million. At the end of the third quarter, they had $568 million in cash on hand. That's really strong. There is no dividend, but as you might suspect, they are doing a share buyback plan. They just re-upped it by another $2 billion. So at the end of the third quarter, it had $2.3 billion in the plan. So they're clearly taking the cash flow and they're buying down those shares. So if you like companies that do share buybacks, this is one for you. Now look at 2025. Sales are still expected to be up double digits, another 21.8%. That is strong. Current year for the earnings up 314%. And then next year expected to be another 45%. But why the Zacks #1 rank? Well, you can see all the analysts after that last earnings report were bullish. 7 are higher for this year and next year. We do have one that adjusted lower in the last 30 days, but the trend is your friend, and the number of analysts that have raised in the last 60 days are trumping this one that's down a little bit. And mostly the analysts are probably just going to be waiting on the sidelines for the next earnings report on this one. Now, another chart that I really like to look at that depicts the earnings and what's going on is the price to consensus chart. It is up and to the right. That's what we want to see. This is pretty steep, and it reflects what is happening with the stock, that both the street and also the buyers, the traders, were a little behind in the story and now are convinced that this product that they have on the software platform, which was up 66% on sales for the third quarter, is going to keep continuing down this path. Now, they are renaming their software platform to advertising because that's what it really reflects. But this is their product, the Axon engine, and it's really driving this company now from basically no one paying any attention to the earnings exploding, and now the stock is following. But I know what you're thinking. How much more is left in the tank? It is off of these highs here, but you can see this kind of tannish line is 2026. So the analysts are still showing more further earnings growth for the next year for 2026. But we'll see when the calendar changes if it can keep up this level of growth or not. That is going to be key for any of these stocks with this kind of momentum. But for now, if you're willing to pay the 82 times, you are getting this tremendous double-digit growth, both on sales and earnings, and expected to head into next year. What I really like about AppLovin is the free cash flow. There's no doubting that right now. And so I like any company that's generating over 500 million in free cash flow every quarter. So this is AppLovin, APP. My colleague Brian Hayes is going to bring you another equally hot stock. He's on the other side with his tech #1 ranked stock.
Thanks, Tracy. Brian Hayes here with our other top stock pick. I have another exciting opportunity for you, so let's jump right in. My top pick provides customer engagement platform solutions. This company offers cloud communications platform as a service, which enables developers to build, scale, and operate real-time communications within software applications. The company I'm referring to is Twilio, ticker symbol TWLO. Twilio's cloud software allows developers to embed voice, messaging, video, and authentication capabilities. So Twilio's API allows software developers to programmatically make and receive text messages, phone calls, and video chats. Companies using Twilio's software can embed these applications into their websites that will help them better connect with end customers. Twilio was founded back in 2007 and had its IPO on the New York Stock Exchange back in 2016. The company operates globally with 22 data centers across 9 regions. Now, Twilio uses Amazon Web Service, or AWS, to host its platform, and it boasts a strong clientele, which includes the likes of Uber, Facebook, Home Depot, Netflix, Salesforce, and X, or formerly Twitter, among many others. So that's a bit about Twilio's background and services. Let's shift gears a bit and take a look at this stock's industry group. Digging a bit deeper, Twilio is part of the Zacks internet software industry, which is currently ranked in the top 9% out of approximately 250 industry groups. Because it is ranked in the top half of all Zacks ranked industries, we expect this group to outperform over the next 3 to 6 months. Quantitative research studies suggest that about half of a stock's future price appreciation is due to its industry grouping. In fact, the top 50% of Zacks ranked industries outperforms the bottom 50% by a factor of more than 2 to 1. So by targeting stocks contained within leading industry groups, we can dramatically improve our odds of success. And take note of this group's performance, as stocks in this group have been outperforming the market over the past 1 month, 3 month, and year-to-date periods. Stocks in this group are showing relative strength, and these are the companies we want to focus on. Also note that while stocks in this group may appear overvalued based on traditional valuation metrics, they are also projected to experience above-average earnings growth, signifying that investors are understandably willing to pay higher prices for that above average growth. And moving to our snapshot page here, we can see that Twilio is a Zacks ranked number 1 strong buy. The customer engagement platform provider has established a healthy track record of exceeding earnings estimates. As we can see here, they haven't missed the mark throughout this 5-year period on this chart. Back in October, the company reported third quarter earnings of $1.02 per share, which marked a 17.24% surprise over the 87 cents per share consensus estimate. Twilio has delivered a 31% average earnings surprise over the last 4 quarters. So they've been consistently beating earnings estimates, and the stock price has begun to reflect this. Twilio is up over 40% this year at the time of this video and has begun to outperform thanks to a late year-end rally. And we can see here that analysts covering Twilio are mainly in agreement and have been raising earnings estimates across the board. Estimates for the current quarter have increased by 16.28% in the past 60 days. The Q4 Zacks consensus estimate now stands at $1 per share, reflecting potential growth of over 16% relative to the year-ago period. Revenues for the fourth quarter are projected to climb 7.6% to $1.16 billion. These are exactly the types of trends we want to look for when narrowing down our list of potential stocks. So Twilio, ticker symbol TWLO, is my top pick of the week. Shares have really come on strong in the latter half of the year on the heels of some positive earnings surprises. I see more upside ahead for this stock. That's it for this week. Make sure to hit that subscribe button. We bring you our top stock picks each and every week here at Zacks.com. From Tracy and I and all of us here at Zacks, we wish you a happy new year and thank you for watching. Make sure to tune in next week for more of our top stock picks.